Our chart of the day is McDonald's. One of the reasons why the Dow is a major drag today. It's the worst performer. It's the worst day since March of 22. You do have the CDC saying that the E.Coli outbreak, linked to quarter pounders, 10 hospitalizations, 1 death. We're still following the story. The analyst community is trying to get its arms around the fallout as stocks down 5%. Downgraded today to neutral from outperform at Baird. Price target to 290 from 325. They're concerned that this could pose a major threat to sentiment. Downgraded to neutral from buy at Guggenheim. We worry those risks are not being accurately reflected in the initial reaction. Obviously, maybe like many of you, we go back to the Chipotle stuff that happened in 2015 with the outbreak that they had. Started in 2015, more than 1,100 people sickened, if you recall. Comps fell almost 30% in the first quarter of 2016. Sales were weak all year. CMG shares fell 21% in 2016. They ended up paying a $25 million fine in 2020. As for the similarities to this incident, if there are any, the B of A analyst this morning says, quote, some originally had the reaction last night of this is Chipotle 2015 all over again, which I personally view as an extreme knee-jerk conclusion at this stage, which is why we wanted to hear from Rob Sechan. He owns the stock. So you heard from the analysts. Now let's hear from a shareholder on what he thinks. Rob, give us your thoughts.
You got it, Scott. Thank you. Hi, everybody. Hi, Steve.
What are your thoughts, Rob?
It's a small position for us, Scott. We've got huge embedded gains, so we are not selling. We trimmed on the show earlier in the year, talked about it, just trends kind of decelerating. But you have to know that this is a great business. Since 2020, McDonald's has performed just shy of the S&P 500. It's 2 times the performance of the discretionary sector. It is almost a little better than the value sector, and it's annualizing at 13%. This is a company that has an incredible brand. There's no doubt that this breakout can certainly weigh on sales in the near term. That's what we saw with Chipotle. That's also what we saw with Wendy's over the last 10 years. So, at least in the case of Chipotle, it took a while to recover. But it's been a great long-term compounder. It still has attractive profitability, 22% free cash flow margins. And, we're neutral only because of valuation. So if we see it pull in, I wouldn't be surprised to see us get back in the name. It's trading at a 26 times forward right now. That's not typically where we would get interested in this business. But if we get a pullback, those are the opportunities that your investors should be looking for to add quality businesses at re-rated pricing.
Can we go back, guys, to the chart we just showed before we moved off of that, which showed that real ramp up? Yeah. That's an interesting chart of a stock that was a pretty good disappointment, Rob, until it started to ramp at the latter part of the summer. And where you've gone now, I think just the other day we had suggested that McDonald's shares were at a new high because you've seen that ramp, but now you get this bad news. Is there risk that you go back to that valley that you saw in July?
I think there's definitely risk of that, Scott. And that's simply based on when you have a catalyst like this and, the price is high, the valuation's high, again, 26 forward, you can get quick re-ratings. So I think that's a possibility, but that's not something that's scary to us as shareholders. That's an opportunity for us to trade around our position. So we'll see if we end up adding to it. It's a half weight for us right now. I'm certainly glad we trimmed a little earlier in the year. Same store sales this year are likely going to be flat. They were up 9% last year. So we'll see if once they get through this period, which I assure you they will, whether they can start to get back on a positive guide path. This is a great company.
Yeah, we'll see what happens. Again, we whether it's fair or not, we look at the Chipotle example just to give some context into what a stock has done in instances where there's been questions about food safety. Whether it will be a repeat of that, who knows? We're not suggesting it will, but it's useful, I think, at least to look at that scenario to at least have some historical context. Rob, thank you. I appreciate you. That's Rob Sechin calling in there. The other story of the day as it relates to food and bev is Starbucks pulling their guidance. Deutsche Bank says the long-term bull case, we view Starbucks as one of the highest quality growth companies and see potential upside to top line margins and valuation under Brian Niccol. I mean, again, you make the connection, just talk about Chipotle, you end up talking about Starbucks because of Niccol there. He pulls guidance. What do you think about both of these stories, if you have any thoughts regarding both stocks?
So as a potential investor in either one of them, you hear these stories and you say to yourself, where's the faster resolution? In which in the news is there something that's somewhat encouraging to me? Starbucks is doing exactly what you would expect them to do, basically hitting the reset button. Basically, Brian Niccol is bringing in, and by the way, he's bringing over some executives that work with him over at Chipotle and understand his process in terms of restaurant management. He's delivering exactly what you would expect him to do. On the other side of that, you hear what we heard from McDonald's. I see the Quarter Pounder as the signature product for McDonald's.
So McDonald's sells 1 million Quarter Pounders every 2 weeks. Okay, that's according to the company. The company suggests it hasn't yet ruled out beef in the E. coli outbreak. So, as long as you have these questions out there, it's obviously for all the talk about the value menus and dollar menus and all this kind of stuff, when you do have a significant revenue driver that now is going to be questioned in any way for any period of time, you have to think about these questions.
Right, and you don't know, I'm sorry, Steve, you don't know exactly how quickly they'll be able to control this outbreak. You mentioned the value meals, and let's remember something. McDonald's, the pricing in McDonald's, it's not just idiosyncratic to McDonald's, but the pricing in restaurants is much higher than it was 4 or 5 years ago. So you have a consumer that hears news like that. They see prices being elevated to what they knew previously. It's very easy for them to step back and temporarily not visit.
Yeah, I mean, a few comments on each. The first thing is that I'd like to ask Kevin, our producer, to send a wellness check out to Josh based on McDonald's news. He's a consumer. But look, I think Chipotle is incredibly informative. And the reason is that if you sold the stock then, you've had nothing but regrets. So people aren't going to make the same wholesale mistake with this one. And if you own the stock here, I personally think it's overvalued. You're going to see flat EBITDA for the next 2-3 years. I wouldn't own it here, but if you own it, this is definitely not a reason to sell it. And if you think it's reasonably priced, it's a reason to buy more. In terms of Starbucks, that's the playbook, right? Throughout your earnings, don't have that as any benchmark. Start fresh. Really take stock of what you have, which is a long-term thing. However, I just don't know it's going to be the high-growth company that it ever was. And I think that dream has died a long time ago because they do have the technology that Chipotle didn't have back then, number one. And number two, the competitive landscape is monstrous. So I think that, it's still overvalued here. Let's see if he can work some magic, but too early to get involved.
What about Starbucks benefiting, though, from the reflation that is going on right now in China, which was not there the last several years?
Again, lots of competitors in China, and it's an American company, and America is not well regarded there.
I do think, though, with Starbucks, the one thing that I think is in the works is kind of reinventing the way consumers even think about the concept, moving away from a lot of the online mobile ordering, which has been pretty disruptive to the process and experience. So I think there is a lot of work to do there versus McDonald's, where we could see a quicker recovery and not asking consumers to change the way that they completely think about the brand.